Good evening to all of you. Welcome you to today's webinar. Today we are going to discuss some important patterns, and these patterns that we are going to discuss are gaps and then what we call as the CPR, central pivot range. So these are two other important patterns or indicators, you may call so, which could be a very important arsenals in your trading tools. So we will first look at gaps with some illustration, and then we'll look at CPR. Now gaps, as the terminology suggests, if today's bar has got no relationship with yesterday's bar, in the sense that today's low itself is higher than yesterday's high. That is, let us say today's low is greater than even yesterday's high, then we can say it's a gap up. So that means suddenly certain big demand has pushed the stock or the asset prices at the opening itself to a level which is higher than yesterday's high itself. So it doesn't have any retracement back to the previous day range. If that happens, then it is a gap up. So we will now see gap up in Nifty, because there are many gap ups in Indian market. We will look at the daily gap up. Okay. So first we will remove this. Okay. Now you can see the gap ups here. See, this is the gap up this day, and next day if you see, it is higher than even the previous day high. That is, even the low is higher than the previous day high. Okay. Similarly, you have a gap up here. This day has got nothing to do with the previous day bar, right? Similarly here, it's got nothing to do. Similarly here. So there are many gap ups and gap downs which are happening in the market today. Okay. So what does this gap up, to what extent it can be helpful in our trading? Similarly, we will also look at gap downs. So gap down means, let us say today's high itself is lower than yesterday's low. That is, today's high itself is lower than yesterday's low. If that happens, then we call this a gap down. Let us see the illustration straight away. See, this day compared to the previous day, it's a straight gap down. Okay. Similarly here, something very similar, say, yes, to some extent, there is some here, let us say this day, it is gap down, and you can see this. Okay. So similarly, we can see gap downs here. Okay. Then we can see gap downs here. Okay. We can see gap downs here. Okay. So these gap downs and gap ups normally are used as important support and resistance levels. Generally, the gaps are considered to be filled, because whatever that has happened might have happened for some emotional reasons. If that happens, the gap gets filled very quickly. But if it is going to have a runaway gap, there are many types of gaps. One is a runaway gap. That is, market will never retrace to that level. There are some big announcements, some big change happens. In that particular case, that gap may not get filled at all also. So such runaway gaps are also there. But generally speaking, gaps get filled up. Now that means we can expect a retracement back to that level. So whenever you get a good rally after that, then you can always be looking towards some sort of an investment. You can wait for that gap to be filled before you can go for an investment. Now if you are a trader, if you see a gap down or a gap up, so let us say if you have a gap up, then in that case you can buy with a stop loss below the gap difference. Now let us say this particular day, okay, this particular day it opened gap up 17,468, and if you see the previous day bar high is 17,343, and here it is 17,468. So you can be a buyer in that particular case with a stop loss immediately below this 17,343. Below that 17,343, you can be a buyer in this. Okay. Similarly, this day also the open was 17,809 and there is a gap. So 17,809 you can go with a stop loss below 17,703. So the immediately you see a gap, now you can go for a buy. So one important thing that you can take for this is, if you see a gap up, okay, then you go for a buy with stop loss below the gap, and whatever difference is that 2 times or 3 times, you can look towards taking profit. Now we'll illustrate that in a couple of cases now. So here let us say this day, okay, here it opened was 16,757, right? So 16,757 with a stop loss below this, below 16,418, and you can see 16,594 only. From this we have not seen this gap filled up at all. So this was one area, okay, this was one. Then second is this, right? So this gap has not been filled. So on this day when it opened higher, you can go for a buy with this day low as a stop loss. Third, this place, it has not been filled. So here also you could have added to it. Now here is the case, and it went up and now it has breached, and then now it has broken this level, which means that probably we should be looking towards the exit. So whatever that you did here, and even on this day, okay, stop loss has come, and even on this day, whatever that you did on this, now this place has become a stop loss. This place has become a stop loss. Now you can see some always you will have, see for example this particular day. So here you have a gap up. And so you can keep this low as a stop loss. Okay, you can. So it went up here, and this particular place, okay, now has been filled. So that is a stop loss. That's a stop loss. And if you see the same thing happening here also on this day, there was a gap up. And it went up, and then the low, and then this was filled up. So the open was here, and the moment it started to fill it up here, I think we need to get ourselves out. So this was also a gap up, but it got reversed the moment it started to break below this. So that is also a very important thing, that if you are buying a gap up, please ensure that you put a stop loss, because sometimes the gaps also will necessarily can get into a reversal situation. Now you see, whatever you bought this day, see this day you might have bought here, open 17,370, okay, 17,370, and then next day also there is a chance that you might have bought at 17,554. So the stop loss for this is this high when it gets filled up, which is 17,477. So whatever you bought here, which is the open price here of 17,370, we need to get down at 17,477. And whatever we bought here, 17,554 also, we need to put in a stop loss of 17,477. So once the gap gets filled, there is a good chance of a reversal that can take place. Okay. And now once that particular place is breached, then we should be getting out of it. So the gaps act both as a from the point of it acts as a type of a stop loss as well as support and resistances. Now if you can see, let us look at success areas, and let us look at the failure areas also. Okay, and see this place. This is a place where it should have been bought. This day it would have been bought, and this place is a stop loss, right? So once it started to reverse, then it has. So this is a place where we could have bought there. See here is on the case where we could have bought here. Okay, this is the place where you would have bought. Okay, this day, and this was a stop loss. So this worked. And here, if this day if you had bought, this did not work. Okay, so it failed at this place. So there was a failure here. And generally the gap, once it breaks that gap difference, then it starts to rally also. That also we will show now. Now, so this is a place where it succeeded, and we have, so this place is also succeeded. So here also we succeeded, and we didn't have a loss. And let's look at the see, this particular day also was a clear day. When see, this particular day also there was a gap up, but the moment it went up, then it filled the gap, and then even went a little lower. And this was on which date? Probably this could have been a budget day, say 1st February. So I think probably those days we can't take it for granted. So here, let us say this particular day, it went up, the gap, and it would have been open, but here the gap got filled up, and it's necessary that we should come out of the situation. Okay, that is, immediately we should know, we should not keep the stock there. So whenever we went for a long in some place or the other, now we should be in a position to get out of this at this level. So once it started to go below this, you can see a considerable amount of reversal here. It fell considerably. And then here you have a gap up. So here you have a gap up. So I think probably this particular whatever trade that we exited out of this trade, I think it's time to build it up here. And again, once it started to fail below this particular high, I think we should be getting all out. So there's a strategy that you can build around the gaps. And we will also show gap downs also. So some of the gap ups we have already shown. And here also you can see so this is the gap up again. So after a big correction, if there is a gap up, say after a considerable amount of fall, if there is a gap up, it is better to look towards buying at that particular level. So here also there is a gap up. Okay. See. So gap up. Okay, so we have to give some leeway for all those. So here is a gap up. So we could have added this position here. Here there's a position we could have added. Here you could have added, and you would have got out of this picture. So on the final stage, there is a chance that the reversal comes. Then in that case, we may even close the position and even can go for a short. So this is a place where probably you can even consider that close all your positions, close all your positions here, and probably look towards even going on the shorter side. Now you can see I told you that these gaps act as support and resistance, the difference. Okay, now let's say this particular place, you can see again when the market started to rally, it had a resistance. So here you can see no support coming here, support coming at this place. Okay, this gap, you can see support. You can see support coming here. You can see support coming here again. So all gaps give a good amount of support and resistance. So now this was a place where there was a resistance, and see here also you can see market taking once it started to go below this, you can see again even this line, if you draw, you can see considerable amount of resistance coming closer to that place. So this is the place, that is gap. So these two places, okay, the gap either up on the downside. So gaps offer a very good amount of support resistance. And if you see we will draw lines wherever it is possible. See this one. Okay. Okay. So you can see the gaps support and resistance here. See, once it fell below this particular gap, it started to move up. There was a resistance. Here, if you see, this is another. See, So this particular place. So all these places and across this horizontal line, you can see always markets having resistances here. Resistance, support, resistance, support. So there are many times when we get support and resistance in the same gap place. So we can use this as a strategy. And let's say here also, if you see, I'm moving it down. Just see this place again. Okay. See how the gaps area gives a very clustered amount of support and resistance zone. So wherever you draw this, you will get across many this one. See here, after a very I told you the gaps normally get filled up. See here also. See this particular gap. Now market went very closer to that, or even you can take this place also. See, gaps gave a support here. So the gaps are very important levels, and we can look at many situations like this. So 16,140 here. See this place. So here, wherever we have drawn the line, the gap, you can see supports coming there. You can see support. See, once it started to fall, it went up, down, up to this gap, right? So gaps are a very important level of support and resistance it can easily give, and we should be quite conscious about it and use this particular thing as for trading tools. See here. So it started to go down, then it offered resistance here. So similarly, as we progress here, see now the areas of support that we get. So this area has been broken, right? This area is broken now. So this area, right? This is broken, and this gap which happened here now has been filled. Now we may move closer to the 17,000. Now this is going to be the next area of support, 17,351. So when we see market heading towards 17,351, we will get good support. Then after that, we will have supports coming here. 17,000, 17,000. Okay. Then we will have support here, 16,427. 16,427. So these are the areas of now supports based on gaps. So let's watch for this. And similarly, the gap downs will go for this. Now this is a gap down. See, so today it went up and got resisted. See the gap downs. Now if you see, this is a gap down, clear gap down. See, these are clear gap downs. Right. So on this day, this particular day, so when it broke below this, that is, it came down to 17,840 levels. So it opened at 17,842. This was a clear gap compared to the previous day close of 17,921. 17,921. So here we are going short. Here we are going to go short and keep the stop loss above 17,921, a little bit here and there. Okay, we can keep it. So 17,921 clearly on this day, the open is 17,842. So we are short. 17,921 is the stop loss. Of course, only 80 points. From there now we have seen a good amount of fall. And right now, see this day again there was 17,652 or 653. Today it just slightly went up, so but they did not sustain even for 5 minutes. So we need to be careful to put that. So 17,650 or 660 is a very important resistance. So we have mentioned that, and here it's now going to 17,350. So what we should do is we should now look towards 17,350 to 17,660. So how do we know work on the strategy for Nifty? Nifty now next support 17,350. Okay, and we will have resistance which will come closer to the 17,660, and this can be corroborated using any of our this one, that is the Fibonacci support resistance formula we can use. See, for example, we go to the Fibonacci now. Okay, and let's use Fibonacci resistance support here. Big resistance support, let's say whether we are getting here. This is 17,177 here, so we'll leave it there. Okay. This is 427, then it comes at 240, so we will leave that also there. And so we will have definitely some supports coming out of Fibonacci if we do a Fibonacci extension and all those things. So we are not going into that right now. Let's look at the patterns itself, and even through Fibonacci we can corroborate that 17,350, 360 is going to be a very important support level resistance. Probably we can use our Fibonacci fan, which we talked about it last time. So Fibonacci feed, this one, we can use it. So we will have supports coming 17,000. I think it's coming 17,388 and 388 or 401. I think the support now is coming closer to 17,401. So it may be 17,350. It could be touch and go. So it could be touch and go at 17,350 levels. So the most important levels of the support resistances is likely to come closer to 17,350 levels, and then probably a fall could take it even a little lower to these particular levels. Okay, 17,150, 160 levels. I will remove this. Now we look at Bank Nifty also, because we have to discuss on the CPR. Now Bank Nifty, you see, this was the gap, right? So you can just see the support coming here very clearly. It is taking support here, right? So once that is broken, then we are not saying that it should definitely go down lower, but see, you can see support coming here, 35,989. So what we should do for those who are looking towards the investment, generally should look towards a fall of certain percentage, or probably coming down towards certain important moving average or Fibonacci support resistances, and if that coincides with a gap, then in that case we should be looking towards some buying. Now this particular place is if it breaks down, the chances that it can go a little lower up to this place. Okay, this is an important, this is some high, or it can go down up to this. Okay, so please watch out for this particular level breakdown. If this breakdown comes in a normal manner, or if it comes with some gap down, then we should be in a position to go for a short. See, here also it was a gap down. See, this day it was a gap down, and you see it is now getting resisted. So here is a gap down, here is a gap down. Okay, so there is a resistance, and here is a support, and here is the support. So you can definitely, you could have used it multiple times for the support resistance place, and we could have gone for a long. See here, this day gap up. Okay, that gap has not been filled. Now here we would have gone out of the situation, because this was the day when the gap it opened gap up, and then this was got filled up. This got filled up, and so we are now we are not into any this one, that is we are not into any short or long position, but here you are in a short position and keeping the same as a stop loss. Here what we are doing is this was the breakdown this place, and then above this we are removing our situation, we are removing it, and here it's a gap up day, right? Gap up day. So here we are going long, and once we are long, we are giving the stop loss here, we are keeping the stop loss here. So you can get a lot of fantastically good trades depending on how we work it out, but there will always be some little bit we have to ensure that we give some leverage for all this, because see, if you see, this is a gap down, this day is a gap down, so exactly if you come out of the thing, then you may lose. So probably we have to look at what extra amount of stop loss that we need to give above the gap in order to ensure that we don't get stopped out. We don't get stopped out. So here this particular gap. So fantastically, you have. So what we should do is that we should wait for it to go up to the gap, and then on an hour breakout. Then what we should do is that we should look towards hourly break below that particular gap, and then go for a short, position. So most of the time we get, particularly in stocks also, we will get. See here also, if you see here this day, see, so it has worked. Only thing is the open here is here. So fortunately, unfortunately, we will be going for a short position somewhere here. So once the market has fallen quite heavily, then there is no point in trying to chase that. But once it is in the start of a fall, after some big move, like for example this particular move. So now you go for a short below this. So that means you have a decent climb. That means, let us say the RSI or stochastics is above 70 or 80 levels now, and then the price has started to fall. That time you make a gap. Then in that case it is better to go for that. Already if it is in a very oversold position, like this, there is no point in trying to chase the gap. So that is what we should look towards. And here also you can just see normally the down gaps are generally get filled up quite fast. So here this particular place. So this is a gap down. And we need to put in a stop loss here. So to the extent that you need to put a stop loss, see, this open was 36,868, and then this was 37,118, and 36,830. So 300 points. So once it started to fall 500, 600 points here, we could have taken profits. We could just take, if we get a 1:2 type of profit, we can look towards taking profit in that case. Okay. So this is an approach that you can usually take it here also. See, there is gap down. So it has gone up very significantly, and now once the gap gets filled, then you get into reversal mode. See here also. So in the early stage, now let us say the market has corrected a little from here, 1, 2, 3, 4, 5 bars has happened. Now here it started to go up. Then in that case we can go long, keeping this particular this one itself as a stop loss. See here also probably we need to be careful if it starts going a little bit lower. So this is a stop loss place. So the gaps are a good place where probably we can look towards keeping stop loss very close to that place. So now if it starts to move, so now what happens in the case of Bank Nifty? If it starts to move above this, that is, this is a gap down and this is a resistance point, right? So if it starts to move above this, then we can keep this gap down as a stop loss, this place as a stop loss and trade, right? So this is very exciting part of it as far as the Bank Nifty is concerned, because there are many cases where probably you will have good profits that can be built as far as this one. See, there are many cases like this fall. So this is the place. See, this place. Okay, then this day when it started to come down. Okay. Okay, then this place. in this place. So there are very many places where probably we could use this to make good amount of money. Okay, so we can use this for stocks also. We can use this for Nifty, Bank Nifty, and all. Normally in a 24/7 market you will not get. So you will get most of this in equities. Okay. So now we will look at what is CPR. And gap we will again come back on some time or other. We'll come back again on gaps. Now CPR. Okay. Now you know the pivot points. Pivot is nothing but high plus low plus close by 3. Right? So this is the pivot which is known to us. Now the CPR is nothing but they call as a central pivot range. What they do is they keep this as a central point of a pivot and have a zone around that, because normally you see the market doesn't exactly stop at the pivot point. It can either go up or come down. Okay, a little bit. It can breach that. So they give a particular range for that. So the one range that they call as the TC and BC, that is PP is known, high plus low plus close divided by 3. This is pivot point. PP is pivot point. Now we have another thing which is the high plus low divided by 2. Okay. Now this is what they call as BC. Then the topmost point is called as PP minus the BC plus PP. This is the formula. This is the formula. Okay. So by doing this, we get a range. We get a particular range. So let us see what is that range. Now in the market, we will go to the. This is we'll go to Nifty. Now, see this day, that is yesterday's day, 595, 442, 530, right? 595, 442, 530. 592, 442, 530. I'm writing the last 3 digits. Okay. Okay. Yesterday's high, low, and close. So now let us do the PP and the range for this. 2. What is this? This is 17,521. PP is 17,521. Okay. Now we have, I told you the BC is I plus low divided by 2, which is 17,592 plus 17,442 divided by 2. So 17,517. So this is a very small range you will have. So the top range is PP minus BC, I told you, is 4 points. Okay, plus PP. So it is 17,525. So normally, you will have, since this is a very quite a small range, pivot range, sometimes you will slightly get a bigger range. So the general feeling is that it can be anything between 521 to 525 to 517. So they would like to see whether it breaches 517, whether it breaches 517. So today, let us see how the market fared. Okay. Now today it opened above the BC, right? So now let's go to the, we'll put a 15-minute chart, and we will use the indicators. We'll go to the pivot. This is in trading view. I'm not drawing the CPR chart here. We will do it later on. So so this is today's activity. If you see today, the central pivot, it is 17,000, as I told you, is 522 or 521, then 525 and 517. So it came down to this 521. Sometimes it can go up to 517. So what they do is they wait and watch for a 517 to be broken. So this is 493. So it is broken decisively, right? So here it took place exactly at the central place, 522, 523. So once that 523 is broken, then it started to go lower. That's okay. Here if you see, then if it came down, it came up, it came to 528. So that's what I'm saying, that there is a range. Exactly 521, 522 will not be there. There will be some range. But it is not, there has been no 5 minutes close even above that. So there is no close above that. So we are now looking towards ourselves a little safe and expecting probably the place to fall, further place to fall. Now, what is generally what institutions do is they see the pivot range and whether the market trades above the pivot or below the pivot and use that for certain calls. Now today, it just opened very clearly above the pivot point, and even went up to 665 or so, and then it started to fall. Now they will wait for again the fall to take place below that 520, before looking towards going short, because they want, if the market be above the average, they want it to fall below the average before they can go for a short position. And similarly, one would like to wait for a buy above the pivot range to go for a long call. So let us say yesterday. Now, another thing that we must note is that what that is the virgin CPR. What we mean virgin CPR is if a particular pivot point has not been traded at all. If a particular pivot point has not been traded, and traded in the sense there has been no market movement around that place the next day, then in that case, whenever the market moves to that pivot point, either you will see some sort of a resistance or some sort of a support coming there. Now, see, we will go back, we'll use this chart and let us see in some areas where pivot points have not been touched at all. So this is quite clustered. So, but I will just tell you in which day probably we could have had this. So I will cut this and then come back. Sorry, we'll go back to the 15 minutes. Okay, now into the auto mode right now. So let's say this is the 15 minutes. See this particular day, if you see, we'll go to the day chart to know to have some clarity. See this particular day, this pivot would not have got traded at all, right? So only today is getting traded. So this particular place, this particular pivot point. Okay. So let us see what is the pivot point on this particular day. It was 1703, 422 and 670. 703, 422, 670. Seven 703, low is 422, close was 670. So let's do the PP only for this. So 17,703 plus 17,422 plus 17,670 divided by 3. It is 17,598, right? $17,598. Okay. See what happened here. $17,600. So that is, since this particular day after it went up, this particular pivot point has not been traded, right? So that has become a very important support point. So that has to be broken. So that is called virgin CPR. That is any particular day. That is after this when you calculate the PP, and if it doesn't trade the next day and goes up, then whenever it trades to that particular level, you will have support coming at that particular place. You will have support. That is called a virgin. That is what we call as a virgin CPR. Now, so we will use even the gaps. We can use the virgin CPRs also. So let's look at. Okay, now let's look at this particular day. Okay, next this particular day it did not trade the PP. That's very clear. So let's look at this. 16,705 plus 16,203 plus 16,247 divided by 3, 16,385. So 16,385 is the PP. Okay, then we have this one BCTC, that is 16,705 plus 16,203 divided by 2, that is 16,454. So we'll have this. So this 16,385. Okay, the 356, 16,385 is the central pivot, and you will have a BC which is lower than that. So now if you see, it came down to that particular centralized central pivot range, central pivot, and then started to take support there. Because this particular day it did not trade. If you see, it was only about 16,478, which is even above the TC. So once it started to come below this, it started to take support. So we need a break below this. We need a break below any of the CPR levels for us to look towards the support resistance level. See here also, if you look at this particular day, okay, then you will see mostly somewhere very closer to the BC range of this. See, for example, 16,694 plus 16,470 divided by 2. So 16,582. 16,582 is high plus low divided by 2. So it comes very closer to that CPR range, which has not been broken, and it takes support there, and it takes support at that particular place, and then only it starts to move up. So this particular theory also we should be looking towards this one. So here, let us say any particular day which has not been traded now. This particular day, see the CPR here. This particular CPR 17,901 plus 17,779 divided by 2, that is 17,840. 17,840 BC range. See, you see 17,840. So it fell here and did not trade above 17,842. So next day when it went up to 17,842, it had a resistance there. So virgin CPRs are something which for this day also someday it will come. It will come. Okay. So this place has not also been traded. So this is what we have shown right now. So next could be probably this place where since this has been traded right now, so probably this particular day's CPR also could be a support. Like for example, 17,343. I'll go for the BC range itself. 17 plus 17,235 divided by 2, 17,289. So on some day when it comes closer to the 17,289, approximately around that place, we will see support coming there. We'll see support coming there. So around that place, when you take a support, and if it starts to move above say 1 hour high or so, then we should go long, keeping that particular low as a stop loss, because we need a pattern also along with this, because sometimes as I showed you, there can be some 10-20 points which can probably it can cut. Okay, it can cut that 10-20 points and then antagonizingly and can give us probably trigger the stop loss and start moving. So we need a confirmation with some pattern, okay, which could be a break of 1 hour high or so. So we have the CPR, then we have a pattern. Both combination will definitely be quite helpful for you to do the trading. So now we are, see, on this day 17,842 we had mentioned. So let us look at on that day with an hourly hour chart. 17,842, right? So we know that this is going to be a very important resistance. So once it starts to break below this, okay, 17,000, what we call 17,764 or so, we can go short, keep the 17,842 as a stop loss. We can keep that, right? So that way, we can look towards a good amount of trading possibility, which we can look towards doing it. And as I told you, the gaps, it could be an hourly gap, it could be a daily gap. Hourly gap also can be very effectively used, and here is the case where effectively it can be used. Here you see this particular low or the close. So 17,664, it went up and started to come down, and here is a gap. Market went up today morning straight away, right? So once the gap started to fill up, so this was the high was 17,531. So once it started to go below 17,531, then becomes a stop loss. So here it 17,528. So you can see the gaps also even in a hourly chart, it becomes very helpful. So here also you can see in the hourly chart, you can see hourly chart, it's very helpful. You can see market opening here at 9:15, then at 12:15 it went up to 17,000. 794 was the low. So it went up right up to 17,787 and started to fall. So the moment it goes up to 17,784, then once it starts to fall below this particular low, we can go short, keeping that high as a stop loss. So that's that way we can also do. Here also you can see this particular hour. Here it's happened. So there are, as I told you, these are many aspects of the trading that probably you can look at. Sometimes the daily gaps may not be there, but hourly gap can be there. So you can use hourly gap also for trading. Say for example, this particular day, I think this was. See this particular day, you can see what is the high, 17,335. So the open was 17,414, but once it started to fill up that gap, 17,332 gap, then in that case we are out. We can just see entirely the market getting washed out. So this could have been a stop loss on an intraday basis, and also a sell below this you can keeping this particular high as a stop loss. So we can do many wonders because everywhere there will be some issues or other as far as losses are concerned, but we should not get too bothered about all those things, because losses are part of trading. We have to accept that and move forward. See this day again, this is an hourly last hour close, and if you see the market going up to this particular place and then starts to fall. So once it starts to fall below this particular high, which is the 16,326, we can go short and keep 16,456 as a stop loss, and the rest is that we can see here. Okay, it started to come down, and then we had a good amount of profit there. Okay, so similarly, we have see once this particular thing, there was an hourly fall here. Once it started to move above this, that we should be quite careful about it, and we should now remove this particular any short position we created here. It should be removed here. It should be removed at this place. Okay. So similarly here it fell, but we have to keep this as a stop loss, right? So basically, these are the ways that we can do both the CPR as well as the this one, that is the gaps. They can be effectively used for this one. The CPR can be used even in other commodities also, because the gaps are difficult in continuously running commodities, 24/7 commodities, but it can happen as far as the stocks are concerned. So let's look at any one of the stocks. Probably let's look at Reliance. We'll look at the daily chart. these are gaps, right? So this is a gap. So on this day when it started to fall, then we can go with clearly the stop loss. So even as a day trading for a concept we can use. See, for example, this day it started to go down, then it continued to go down. Okay, on Virgin CPRs also we can use. See, probably we can consider this particular day. See, this particular day there will be a good amount of support. This is based on, see, 2584 plus 2510. 10. So the bottom is 2545 levels. 2545. So there's a chance that it can probably look towards taking support from here. But if it starts to fall below this, then in that case we need to get out of this particular stock. So this is the Virgin CPR. So Virgin CPR, it has given some sort of a support here, right? So we can look at this. Okay. So see, on this particular day it might not have traded because it's a huge bar and it would have gone above the support, this one. So when it start to look at the Virgin CPR here, so once it starts to collapse below this, then probably we should look towards exiting. Here also is a gap down. See, gap down, and the gap very effectively you got a good amount of money made. So you will have in index we are getting more gaps, I think, more than Reliance. So here it's a chance that this is a gap. This is a gap up. So this is a good gap up on this day. So this is a gap up. This is a gap up. This is a gap up. But we need to be careful. We have to be out of the market, and here not much. So so once there was a gap up, so you would have put a stop loss. Well, once it came down again, this was resisting. If you see, this was resisting, and once it started to move up, that, so a big candle forms. So you can put back this as a stop loss, and then trade. Okay. So this particular levels, on an intraday, probably this levels and all could be acting as very good important support and resistances. So this is a gap. So we could have gone long, keeping this back as a stop loss. So there are many days when probably we can get ourselves in this particular day. Also the gap up day, so we could have gone up. So let's look at for some gap ups, and see, now the market has come down. No, any gap up on this particular from now onwards. So we can keep some way that if the market has fallen by a certain percentage of points, and then if it starts having a gap up, then we should be going towards some long position. So we can keep it like that. This is Reliance. So we will look at probably TCS. So probably not much, I think, right now. So the whole gap down. So this gap down now, when it went up, offered resistance, then this place. So once the gap down was closed, then probably we can go long. This is one where the gap down was there and it went lower. Then after that it started to come back. So once it started to breach this particular level, we can go for a buy around this level. And if you see, this is a place where gap up, and we could have gone long here. This is a gap up day. This is a gap up day. So this is a long with a probably a stop loss below. So what you can probably do is that on these gap up days, a little bit closer to the gap, you can look towards buying. That's you can have a program where this is a gap up. So once it started to come very closer to the gap, you can go for a buy. Keep some levels below that as a stop loss. So that is one thing that we can do. See, for example, this day also, we could have bought, but even for intraday we could have bought and made some money and come out of this. So here again, this particular place where it was a gap up. it was a gap up. So normally in gap ups, no, generally you don't get it below the PP range. So no, this particular day this gap up, so you can on retracement you could have bought, keeping low below the CPR as a stop loss, and so this is the this is TCS. So right now TCS is looking a little dull. So let's see what happens as far as TCS is concerned. So this is how no, normally no, you look towards the gaps and the CPRs. So you can practice that and use that as additional tools. So you can have gap ups and gap downs. So what happens is that no, if the market has fallen considerably, then in that case no, after that you don't need to look towards chasing the market. Then in that case you can do only intraday trade. But after that, if there is a reversal above that, then in that case no, you can look towards going long. You can look towards going long, keeping that particular low which had come up to that point as a stop loss. And more than that, if there is a natural gap up in the buy side after the market has come down significantly, then in that case no, it should be heavily bought. It should be heavily bought. The market should be heavily bought because it's the start of an early rally. Okay, so we should continue to hold the particular trade for a longer period of time. Okay, so thanks very much. So in case if you have any questions, please ask. Nifty today the 17,660. See 17 okay, 17,660 is a resistance area. Then we have the 17,540 levels. This is another resistance area, and support if it breaks 17,442. I think it 17,350. 17,350 is a good possibility. 17,350 is a good possibility. Okay. So the market is now going in certain steps. Okay, and the one thing is that no, if since it come down to 440, the next level could be something like 350 levels. 350 levels. Of course, there will be some support coming closer to 17,390, then 350. All support levels. So you can look towards buying breakout of one level. This one. So 17,442. It breaks down. In that case, you can keep this particular level as a stop loss and look towards these extra levels for support levels there. Okay. Thanks for your participation. Good night and happy weekend. Thank you.